Hey, hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. So, look, we have a busy day today, in my opinion. It's the last Friday of the month, so we're kind of wrapping up the month, hence the name of the webinar as well. We do have a few economic events that came out already, so quite important ones like the Tokyo CPIs and the British GDPs, and also we're expecting today the Canadian GDP numbers together with the long-awaited Fed's beloved PCE index. So, look, there's a lot to talk about, so join in. By the way, this is a quick video preview for the webinar, which is going to happen in a few seconds right now. So, hey, stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, okay, ladies and gentlemen, hello, and good morning to everybody. Hi, my name is Darius Anucauskas, and I'm the global market analyst here at Markets.com, and today is Friday, the 28th. Yes, had to double check very quickly. The 28th of March of 2025. So yes. Welcome everyone, welcome to this last trading day of the week, not the month. We still have Monday to go through, but yep, we're getting there. Look, the last trading day of the week, but to be honest, judging by the amount of data that's coming out today, I kind of somehow think that everybody will be wrapping up the week and the week today. So Monday could be just like a formality, right? Look, before we jump into the markets, before we start checking out what's happening, what I would like to say here is let's have a quick read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Oh, excuse me, absolutely. Yep, there we go. Live TV there for you. Right, ladies and gentlemen, yes. That was a little bit dusty here, I think. Look, I hope you're, like I said, you're all feeling nice and I wouldn't say relaxed, but nice and kind of, ready to hit that weekend. And I think that yes, I think we all need that rest. But before we also jump into the charts, as usual, let me just quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at the markets here. So, what can I say? Nikkei 225, and the economic data that I want to pick up here that came out this morning was the Tokyo core and headline CPI numbers, which I cannot see the numbers for. Let me just double check if it's only this. This is a trading view issue. No, there we go. So there we go, the Tokyo core and headline CPI numbers. So the core one came out at 2.4, higher, and the headline higher. Okay, so this now plays in nicely with the BOJ, because look, I mean, the BOJ recently came out saying that they want to go for hikes because they believe that food inflation could be on the rise, and well, we can see that yes, the Tokyo core and headline CPIs are showing a little bit of an incline. Okay, that's interesting. So looking at the situation here, you can see that Nikkei is selling off. In a way, everything is according to the theory that higher inflation kind of is not very good for the stock market, because again, it increases the chances for the central bank to go and hike rates, and in this case we have exactly that. There is a potential for seeing an increase in rates, and this is what the reaction we're getting right now. So Look, I talked about this last week as well. I said to you that if you're looking for some higher levels, then at least wait for a pop back above the 38,260 zone. This way, we could attract more buyers here, and yep, this way we could see a move maybe towards this downside line taken from the high of the 10th of July. But we got a drop back below the 37,269.70 zone here, so this kind of now raises concerns, and there it could lead to some lower levels. However, I have to be careful, and I have to say that do not rush yet, because maybe this is just like a temporary break, a little false breakout, because this is the cash index that we're dealing with. Where we have to still go through the whole European trading and then the US trading. So maybe we could see like a reversal at some point. But again, that's for now. We of course are looking at the bearish scenario. If we stay here, then yes, I'm leaning more towards the downside. However, I'm not really getting very comfortable with the downside, because again, ideally the comfortable part for me could come on a drop below the 35,970 zone, which is the current lowest point of March, because I have to say that that's the current lowest point, because we're still in March, and we cannot really say that this is the lowest point. Maybe something happens and we sell off heavily today, and or maybe Monday. So let's keep an eye on this one, but again, for now, it is looking a little bit more bearish, and the Tokyo CPIs do confirm that. China 50, let's have a look what's happening here. China 50 is holding on nicely. Now, but there are a few ifs and buts and and all that stuff. First of all, yes, we had a decline, and we saw that the hype from the words of the Chinese government, they kind of faded away, because they were in a way supporting the they said that they're going to support the stock market, and okay, that's all fine. But I've mentioned this before to you, that they have this tendency to come out and say something positive, say something good, and then hype up the market, and then the market is kind of waiting for further action, and they don't get the further action, and there we go, we drift back down. So this is where it was initially they were coming out saying that probably they might consider even cutting rates. But the PBOC then last week, it was on Thursday if I'm not mistaken, the PBOC did not do anything. Let me just double check that very quickly. So they did not do anything, and they kind of kept the rate the same. So this was the kind of the follow through that everybody was maybe hoping to see. Maybe they were like, hey, saying, let's see now if we can get a cut, but we didn't get a cut, and it kind of, the excitement faded away and pushed lower. But still, the Chinese market seems to be holding on. Nevertheless, looking at the technical picture here, look, we fell back into this range which I talked about, and so far the upper side of the range, which is roughly around that 13,500 zone right here, it's holding, it's acting as a good area of resistance. So, and this kind of points towards possible further declines, and also the fact that maybe this is this little range here where we're trading right now, this little action here, we look at the prevailing trend. The prevailing trend was to the downside, so the greater chance for this one to break out could be to the downside. But we do have an upside line here, which maybe could do the trick and provide support. So that's why I'm not in a rush. For now, I'm just observing the price action, and my ideal scenario for the downside could be on a drop below this 13,000, maybe 150 zone, somewhere around here, just because at the same time, we could fall below the 100-day EMA. As always, I forgot to mention good morning, everyone. Good morning, everyone in the chat room here. There we go. Let me just put it there. So jumping into the U.S. Action here. So look, so far the U.S. market is a little bit on shaky grounds, because again, Trump came out with tariffs, more tariffs, which will take into effect on the 2nd of April, if I'm not mistaken. And those tariffs are the 25 basis points, 25% tariff on on imported vehicles. So, of course, that's not something that the market likes to hear, and well, we saw a bit of a decline there because again, if you think that it's only, you know, that the European manufacturers that could be worried, and for example, let's take a look at BMW for example. Look, we did saw a recovery, but like the initial reaction was to the downside. We had Volkswagen, which came out well, which was also showing, there we go, a lower drop, a nice good drop here. That's after the tariff announcement. So yeah, we did get some action to the downside here. Now wait, Stellantis, where's that Stellantis? Ooh, what's the ticker for that? There we go. There we go. STLA. So these guys also declined. So in general, it did take a hit. The European manufacturers, the European companies did take a hit. However, GM also took a hit. Ford also took a hit, because everybody understands that those countries where to which the U.S. Car giants are exporting, they might also retaliate against the tariffs which the new administration kind of imposed. And one company in particular, this one right here. Now, maybe it has a little bit of a different story here, because again, this company, Tesla, is kind of very tied to the government, and you know, maybe they're like getting funded by other projects, you know, they're getting other projects apart from cars, and that's why they're, you know, still able to stay afloat. But in general, the cars, I mean, we know right now the backlash that Tesla cars are getting, so that's something that I think the market needs to understand, and investors need to kind of keep an eye on very carefully, because yes, we saw a decline. We almost like dropped 50%. How much did we drop? Let's measure on Tesla. What was the drop from the beginning of this year? So December, there we go, January. So we started off right here. Where's my magnet? We started off right here, and basically we dropped right now. Today we dropped around 30%. At one point we were dropping 42%, so okay. But yep, right now we recovered a little bit. Now we're in the loss only by 30%. I mean, I would say that's a lot still. So yeah, the people who were, you know, buying Tesla and hoping that it's gonna fly to the moon just because of the ties of you know, its political ties, then yeah, I think that those investors got hurt. So looking at the Dow Jones Industrial Average right now from the technical perspective, so we did retrace from that 50%. We did recover 50% on the Fibonacci retracement here, measured from the highest point of February to the lowest point of March. And we did a 50% retracement. Now we're dropping back down, and we're currently resting on the 200-day EMA, slightly above that. So let me just get rid of this Fibonacci. It's a little bit in the way. If you're looking for some higher levels, well, I said it before and I'll say it again, I need a break above this downside line taken from the high of the 20th of February. If I can get that move, amazing. More buyers here could join in. So that's what I'm going to do. In terms of looking at the downside, I think, okay, this is my comfortable zone, a drop below the 40,650, because this drop would confirm a forthcoming lower low. But you know what? I think that we could start looking at some lower levels if we start falling below the 41,700 territory, and then we could go from there. The S&P 500, now this one's looking a little bit more bearish, and we fell back below the 200-day EMA. So in a way, this could lead to some further declines. Let me just put this one away a little bit. Yep, I'll use it later. So now the fact that we fell below the 200-day EMA, that's great. Okay, so can we see you know, a further decline? Well, at this point, because I'm not very comfortable and not all my boxes are getting ticked in terms of this, excuse me. That's why I am gonna remain a little bit on the careful side. I'm gonna be watching this and p, but I prefer the Dow at this point because it kind of gives me a little bit more clarity. This one, it fell below the 200-day EMA, yes, but now it seems like I will be chasing the market. So let's see what's gonna happen with Dow, and then maybe we could see actually the S&P 500 here starting to oscillate around the 200-day EMA. NASDAQ 100 fell back below the 200-day EMA, and also again look at this beautiful test of the 38.2 on the Fibonacci retracement. So yes, good result here, and we started falling back down. We fell back below the 23.6. So not everything is looking very good for the stock market here, for the tech sector, I would say. And look, let me get rid of this Fibonacci. What I'm looking at here is something like this. So as you can see, this upside line here is still holding, still helping the index to not fall apart. But if it starts breaking, honestly, I'm considering a move further south here, and by further south towards the lows of this month, near the 19,100 zone, and then we'll go from there. Look, today we have the very important PCE number coming out. So let me just jump into the economic calendar. So the Fed's beloved inflation metric. Look, the core PCE price index is expected to come out at 2.7, a little bit on the higher side. And the year-on-year, the headline one, is expected to remain the same. Now, if we do get that number on the higher side, let's say by maybe like 0.1% or something like that, then this could still maybe play out somewhat positive for the stock market, just because it could show that there is a little bit of growth happening. If we would jump, let's say, more than by 0.2%, then I would say, then yes, that's kind of pushing the Fed towards a possible or not a possible hike. I want to say reducing the amount of cuts that they're currently planning. And let me just refresh the page here. So at the moment, I mean, we are expecting by the end of this year, we were expecting 2 cuts at least. But now look at this shifting. On Wednesday, this was like here. Then there was 2 cuts expected. Now there's 3. Let's see what's going to happen with the PCE numbers. If there was going to come out much higher, then maybe this could shift back towards 2 cuts. But what I'm more important than this is what I said in my previous webinar. What's more important for me right now is this one, the June number. I mean, how much it will stay in the zone where we are kind of, where it's going to show that we will get that cut in June. So at the moment it's 58%, but look, there's a long way to June still, or maybe somebody might say, hey, it's the time flies quickly, so we're going to be out there very soon. True, but first we'll have to deal with the May one, the May interest rate decision and the press conference. So that's happening on the 7th of May. So at the moment, I mean, during that meeting, we're not expecting any cuts, but this percentage here could even grow. Like I said, if inflation, if the PC number comes out on the higher side. Now, if it comes out on the lower side, now this is where it could also be beneficial for the stock market in a way, but again, it depends on by how much, and look, maybe if it drops much lower, then yeah, I think we could see a rebound here, but still, looking at these companies here, the tech giants, so yeah, they're not really feeling very well. NVDA, this one, Microsoft, Meta, which the Facebook stock, yep. So these guys their stocks don't really feel very good. And look, of course, I do say normally that don't apply technical analysis. Really, don't only apply technical analysis on stocks. You have to look at the fundamentals, that's for sure. But just purely from the technical picture here, this looks a little bit more on the bear side, because it seems like the EMAs want to want to converge here, and they want to cross to the downside. But again, this is something that initially looks like that, but maybe it's not going to be true, because look, we had something similar here, back here, and we were fine, right? But we have not been in this mode here where we crossed to the downside, for like where the shorter EMAs have crossed the longer EMAs to the downside. So we have not seen this for quite a while now. So like we're going to be very carefully watching that. For now, we can see here on the NASDAQ, we have the 50. Look, it has not been like this since, when was the last time it crossed like this? And yep, it was back in 2022. So look, we crossed now. I mean, I'm not saying that to get very bearish or anything, but we could still see a recovery. Just look at the 200-day EMA. If we somehow see all these EMAs crossing below the 200-day EMA, well, wow, that could be quite an interesting moment here for the stock market, or specifically for the bears. The German index. Oh, by the way, before I jump into that one, actually the dollar index as well. So let me just put the dollar index here. The dollar index is, yeah, it's also waiting for its moment to shine. So I talked about the dollar index yesterday in one of the videos on YouTube. So you can check it out. Let me just show you what I'm talking about. So where's that video? So basically, you can check out this video here on YouTube, and I talked about the PCEs, a separate little piece on the PCEs, and look, I explained my point with the US dollar as well, and I'm not really getting very bearish yet. But again, for me to get very bearish on the US dollar, I would need to see the PC maybe falling very much to the downside. So yes, keep that in mind. At the moment, from the technical perspective, we're seeing a nice little rebound here. That's fine. So from this 103.75 zone, okay. I'm still kind of leaning a little bit more towards the upside on this one, to be honest, but purely from the technical side. But I have to say that wait for the numbers to come out, and then maybe we can do something about it. So at the moment, just observe the price action. The German index, DAX. Yeah, so far so good. This is working out nicely. 22,850 zone, I talked about it. It provided good support previously, and there we go. Boom, we dropped below it, and now we're approaching this this upside line here, taken from the low of the 21st of February. And we're not far from that one, so most likely there is a chance, or that's actually not most likely, but there is a chance for this one to test it. But if we somehow start climbing back above the 22,850 zone, I would say I'm going to lean a little bit maybe towards the upside. In terms of economic data from the Eurozone, look, we got the UK figures, which I'm going to jump in a bit when I'm going to pick up on the pound. But we're getting the consumer confidence number from the Eurozone, industrial sentiment as well. So yeah, a few important pieces of economic data are coming out. So let's see how those are going to play out. But for now, if those are going to be on the lower side, certainly there could be some further declines here on the German DAX. The FTSE 100, so look, it's stabilized. It's stabilized and remained above that 8,610 zone, basically above the 50-day EMA. So if you're looking for some higher levels, then what I'm going to say here is that I would like to see a push above this downside line, and if we can get that move above this downside line, then great, more buyers could join in. In terms of the downside here, yes, a drop below that 8,610 zone is required in order to get a little bit more excited with the downside. In terms of economic data from UK, let's have a look. The trade balance did improve a little bit, so that's great. Business investment year on year, okay, the expectation was for a very low number, but still it's worse than the previous. Now the GDP number, the final year on year and Q on Q. So good number on the Q on Q, improvement, and also improvement on the year on year. So that's So that's great in a way. So that's great. Retail sales number is also on the higher side. So in a way, this is what's helping the FTSE maybe to recover back up a little bit. Let's jump into the Forex world, ladies and gentlemen. And looking at this here so far, yes, so good. So far, it is very technical. And I am kind of I have to say that as long as we stay above this upside line taken from the low of the 3rd of February, then there is a good chance for this one to drift back up. But preferably, if you're looking for some lower levels, then a drop below the 0.6255 territory here is required. If we can get that move, amazing, more sellers could join in. Now, if we are looking at the much higher levels, then certainly, of course, a break above the 0.6408 zone is needed. This way, a forthcoming higher high will be confirmed, but maybe even we could see a break above the 200-day EMA. But look, for now, I mean, the most important thing here is the PC, what's going to happen with that one, and what kind of reaction in the US dollar we're going to get. So this will determine what's going to happen further with AUDUSD. If I said previously that I'm leaning a little bit more towards the upside on DXY, then well, we could expect this one actually to fall lower. And one thing that supports here the downside on AUDUSD is the fact that we're currently struggling to even push back above the 50-day EMA shown here as the green line. And we did have a few false breakouts, but yeah, we're struggling to stay above that area. Well, that's not good. So it that's why it's pointing a little bit more towards the downside. AUDJPY. Now this one, I do like it still. Let me just double check if this is very subjective. This downside line is very subjective. I think maybe it should have been drawn this way. Yep, I think that's much better. So yeah, I think this is the best way to draw it. This one's taken from the highest point of July of 2024. Look, these are all subjective lines. I mean, they're not very objective. This is something that we try to, put on the chart in order to kind of make some sort of an explanation to something, right? So yeah, that's absolutely fine. It's all okay, but hey, we still need a breakout. I still need that pop above this downside line, above that 50-day EMA. So yep, if I can get that move, amazing. I will get a little bit more comfortable with the upside. For now, everything's according to the plan here, according to the idea of holding below downside line, although I do have to accept the fact that I have just drawn this newly downside line. I mean, I've updated it. So yeah, what can I say? For now, it's a moment that we're waiting here. So looking at this pair in general, we can determine what's happening with the stock market, because again, this is a pair which is the monitors risk on, risk off environment. And well, what can I say? This one right now is showing that, well, where the risk on environment seems to be diminishing a little bit. But again, maybe, like I said, a short-term breakout here at some point could be possible, so we're not excluding that one. NZD USD is similar story. We're waiting for the US PCEs, and looking at this picture, it's, to be honest, looks a little bit more bearish than bullish. And I would say, if you're looking for some lower levels, then probably wait for a drop somewhere below this territory, below this this key area of support here near the 0.5709, somewhere around here. A nice good drop below that would confirm a forthcoming lower low. USDJPY, let's have a look at this one. This one's looking good so far. So yes, there is potential for some upside here on this one, but I need to see another push above the 50-day EMA. If I can get that push, yep, I'm leaning towards the upside. USDCAD. Now this one's going to be monitored very carefully today, because again, we do have the US data and we do have Canadian data. Canadians are releasing their GDP number, so the GDP month-on-month figure is coming out. So yes, we're going to be watching that carefully. The budget balance is coming out as well. So yep, there could be some action. If you are trading USD CAD, this is something that you could keep an eye on. In general, I think what I'm going to do here is I'm going to remove all the drawings and have a fresh look, because what I'm seeing right now could be a possible falling veg pattern now, or maybe it could be actually more of a like a descending triangle. So this is where the, like I said, this is where this subjectivity comes in, because we don't really know. We're trying to understand what it is, but maybe on one hand it is like a falling veg pattern, but on the other hand maybe it's actually more of a just descending triangle pattern. If it is a descending triangle pattern, according to all the TA rules, such patterns tend to break to the downside. But at this point, I don't think that we have to kind of just follow blindly the technical rule, and I think we have to wait for the numbers to come out today. So check out the economic calendar for that. USD now another pair that I really like, and it kind of almost replicates the action on DXY. And hey, look, very straightforward for this one. If I'm looking at some higher levels, a pop above the 0.8870 zone for me is required, because at the same time we could push above the 200-day EMA, more buyers then could join in. For the downside, a drop below the 0.8757 territory here could do the trick, because a forthcoming lower low then will be confirmed. So while we remain in this little territory, I'm just observing the price action, not really doing much. EURUSD, let's have a look at this one. EURUSD, look, again, watching the PCEs today. Yes, the European data is going to be important as well, but not as probably important as the PCE. So because I think we could get more action on the US dollar, and that will determine what's going to happen with this pair. That's why at this point, look, I mean, in general, I don't like it. I don't like what's happening here. For me, this is like very not the setup that I like to watch, but hey, I go with the flow, and I just try to be as careful as possible. So if you're looking at some higher levels, then I would take a very conservative approach here. I do understand we're currently around the 1.0770 zone here, but my preference here is still in a pop above the 1.0950. All this zone here, I just don't like it. It might be, a bit of a roller coaster ride here. So that's why my preference here for the upside is on a break of this 1.0950. If we do drop below the 1.0730, yes, I'll continue with the correction lower. EUROJPY very quickly. Again, we're somewhat of a positive note here, I would say, but again, have to be very careful for now. Look, let's put it this way. I'll take a very, like I said, conservative approach here. As long as we stay above all my EMAs, I'm going to lean further north. If we start falling below my EMAs, then there is a chance for a test of this broken downside line from above. EURUSD, just a quick update. So I talked about it recently in one of my analysis here on Markets.com page here on TradingView, and yep, I mean this, and I recently picked up on this one as well on Wednesday. So it seems like a falling veg pattern, so which according to all the TA rules tends to break to the upside. This is, like I said, this is looking a little bit more on the bullish side. Earth's Satisfaction, hello Darius, glad you're back. Hey, thank you very much. Yeah, I mean, I was away on Monday and Tuesday, but now I'm back in. I'm gonna be back on Monday as well, so Monday is gonna be fine. But honestly, wow, thank you very much for the kind words. Really, really appreciate it, and you're really brightening. Piece of advice: cut lies into sections for China50 and S&P and upload videos one by one for more reach. Okay, sure. No, look, this is the thing. You found me after 3 months. Look, for me, like I said, this live session since you left is okay. Yes, okay. No, well. Look, I mean, my name is in there. You can search and you can find it, and it's not like I'm not hiding like or something like that. No, I mean, but yeah, thank you very much for the kind words. And in terms of the cutting the videos, look, I do separate videos, and what I do is this live session, which I do, Yes, I do understand. Maybe a lot of people, like don't like to sit through the whole session and everything. But this live session is mainly for people like who want to discuss. For example, people who want to participate like in a communication or something like that, where we can discuss. We can chat and. So yeah, this is, like I said, something that I think, like I said, there are different types of videos that I do. I do separate analysis, separate pieces, but in the lives, you can always see that I do include the chapters where I explain. Let's say, okay, this is where where you can see the timestamps, and you already you can scroll through the video if you're watching it as a recorded session. You can scroll it to the point which you want. So, but yeah, I know what you mean. Yeah, I can cut it out. Like, I mean, I can try to cut it out and throw it out there. Um, we can try to do that, of course, no problem. But China 50 a lot, right? Okay, almost nobody does it. I do look at it. I like China 50, honestly. Earth satisfaction. Honestly, I do like China 50, and I think that this is a good index in general. I do like very very weird instruments like yeah. Okay, well, look. First of all, Earth satisfaction. Thank you very much. First of all, I really, really appreciate your kind words in there, and I really do. So hopefully now, I mean, now you found it, Paul. There we go. I think it's easier. Paul, thank you very much. It's a mouthful with the Earth satisfaction. Paul, it's good. Thank you very much, Paul. Look. Thank you once again. I will, like I said, I will take your suggestion into consideration. I think that could be good. It's just sometimes, like I said, when we cut it out, it might not like really sound very well. But anyway, we can play around with that. Anyway, thank you very much for that. Look, let me go back to the Forex and yeah, let me look. If you have any more questions, it wasn't a failed project or satisfaction. Yeah, failed project in general, like in real life as well. The Earth unfortunately will not be satisfied. But or actually, you know what? On the contrary, people will never be satisfied, and Earth will be the one that will suffer most of the time. So yeah, that's the harsh reality. Look, coming back to Euro Aussie situation here. Looking at this potential, like I said, potential falling wedge idea, which according to the TA rules tends to break to the upside. I have to say that while we remain inside the pattern, we could still move, to the downside here, but that's why I'm not rushing into things. And another thing that I've noticed before, and everybody will, who's in this game has been in this game for a while, you will agree that, look, this could eventually break out higher, but what could happen initially could be this. And we could break out to the downside, maybe travel a little bit lower, closer to the 50-day EMA. Everybody's like, oh my God, like that's it, I need to go and sell. And then it kind of starts reversing back up, let's say the same week or in the second half of the week, it starts reversing back up and, goes higher. This way, then we could have ourselves a nice false breakout on the weekly candle, and kind of it would explain. Maybe it wouldn't be quite noticeable on the daily, but on the weekly, it would be quite logical in a way. So that's what I'm saying. Do not rush. Wait for the confirmations, and then you can do something about it. I'm gonna skip Euro NZD. I'm gonna jump in GBPUSD because that's something that we are watching today. So we saw some data coming out. So yes, some positivity in the pound, but look, for me, pretty straightforward here. We're stuck in a little range here. I need to see a clearance of one of these sides of the range, and then I can do something about it. But at this time, I don't want to touch it, and I'm just going to observe the price action. I would say this one looks a little bit better, more interesting than EURUSD, especially coming, like I said, with the upcoming PCE number. So that's why I'm not going to rush, but I'm going to be monitoring this one very carefully because this one has a very, like a more tight range. So a breakout could happen quicker, let's put it this way. GBPCAD, another pair that I'm watching today because again, because of the Canadian numbers, and this one looks quite interesting because again, we have this downside line. Do we have ourselves something of a falling channel here? Well, yeah, I mean, we have ourselves something like a falling channel. Look, again, according to all the TA rules, we look at the prevailing trend. The prevailing trend was to the upside, so there's a greater chance for this one to break out higher and blah, blah, blah. However, while we remain inside the pattern, still it could drift. It could drift still to the downside, so don't rush, okay? Another pair I wanted to very quickly to pick up on here, and sometimes probably you don't trade it very often, but hey, look, it's still good to look at these. Look, we are in a decline, and a big decline here, right? I mean, it has been drifting lower, wow, since like May 2022. From the very short-term perspective, I can see that we're forming something of a maybe a little like a little bearish flag here, but this will probably be better seen on the weekly chart here. And of course, I mean, you see it yourselves as well. I mean, this is what I'm talking about here. This key area of support, which is the lowest point of August of 2024. Look at this. This year in March, in the beginning of March, it played a fantastic role. I mean, it acted as a good area of support here as well. And if you're looking for some lower levels, pretty straightforward. You need a clearance of that one. But in a way, if you're feeling very adventurous, you could start, keeping an eye on the lower side of this also possible rising channel. And if we can clear the lower side of it, then yep, great. Potentially more sellers here could join in, and we could aim for that key support zone, and then we'll go from there. Let's jump into the commodity world. Gold. I mean, look at this madness. I mean, look at this today. Yesterday I was talking about this one. I did a piece on TradingView yesterday, just before it kind of popped here, and it said, look, we're knocking on the door. That's why I said knocking on heaven's door again. Look at this. I mean, this is just spectacular, I would say, and this is just something that I would say quite crazy. I mean, look, gold. I mean, look, it had a good run. I think, I don't know. It's like the bulls are really cannot be pleased no more. Like, I mean, they're like, we want more, and okay, look, can I say, like it's. Of course, I understand the logic. I understand. I understand the logic here, and I understand that there's fear in the market. People are don't know if they want to stay in the stock market. They just want to maybe go and jump into something more safer, like like a Japanese yen, or like gold or silver, and all that shebang. Yeah. Paul, I can see you're writing there. China found 2 big reserves of gold yesterday, 2,000 tons of gold. Let me just double check. I don't know this news actually, to be honest. I mean, maybe I missed this somehow. Let me just double check. Gold discovery is set to redefine the bullion. When was that news? China finds. But that's a while ago. I'm looking at the date, the news. Let me just 19 China finds gold. Okay, wait. It seems like there is some news that came out South China Morning Post. And yep, in the South China Morning Post. Let's have a look. Economist levels. China familiar with gold. Fine. Okay, let's see. Where's that? 2,000 tons of gold, says new technology held for largest deposits. And to say they have discovered 2 potentially record-smashing 1-ton gold deposits in central and northeastern China, and more discoveries could come with the use of advanced exploration. Right. Okay. If this is true, it's say like in stock, you don't know gold. You just been on price. I don't know. I found out today about the news in China finding gold. Yeah, yeah. Yeah. This is the like I said. This is the article in the South China. What's the name of that? South China Morning Post. Yeah, South China Morning Post. So yeah, there is a heading in there, but let me just see if this is yeah, okay. So they're saying that they found right. Okay, look, in general I would say this way. We're seeing this positivity right now. Maybe that's like a little dance before possible reversal. Maybe everybody's like, oh crap, we found more deposits of gold. So basically, if you're looking at just a simple supply and demand situation, you have an increase of supply. So you have an increase of supply, and I mean, I don't know. I mean, are you normally according to all the logical economics rules and everything, and I mean, you increase the supply, if demand stays the same, then the price falls, right? Period. Like, and that's what we're seeing right now, and we're seeing a nice drift back away from this from the highs that which we reached today. This morning we already reached the 3,080, almost $86 per ounce. I mean, again, look, keep your eyes on the PCEs, because if the dollar strengthens, this could reverse back down. So in general, I said before that, and by the way, there's a newsletter that's going to be coming out soon from Markets.com. The April newsletter, so you can subscribe to that one. And well, I think yeah, you can check out the info there. But on the website. But yeah, what I said in there, that there are rumors that maybe we could see a little bit of a retracement back up, right, in the stock market, and for that to happen, we need to see kind of the new administration basically kind of not doing anything, just leaving it as it is. And then the stock market I think will correct. Everything's fine. We'll push back up. But look, there are millions of thoughts, that kind of run through everybody's head, and why everything is happening like this. In general, I would say this way. When something is crashing, when the stock market is crashing, companies that remain cash rich, they remain afloat. Yes, their stock falls, but it's okay. It's an opportunity for people who have money to invest into those companies. The companies that don't have much cash, they collapse in a way. They have to be bailed out, and either they collapse totally, or maybe they're bought by those companies that have cash. And this is where the kind of excitement of the financial crashes comes in, right? I mean, well, the excitement for the big players, because it's like a shopping spree. Like you go shopping for like, oh, that's on discount, wow, that's amazing, I like that, I always wanted that company. So it's all there are people who benefit, and that's fine. What can I say? It's unfortunately that's the game, and as much as it doesn't sound good, but coming back to gold, I'm trying to understand where the level, which level it can go still to, and this is what I did on Wednesday. Yeah, I applied this little Fibonacci expansion on this way basically, and I said to you, look, we are it seems like we're gonna go, and this is where I talked, like I said, on Wednesday here, and we were still here. On Thursday we started popping higher. I said, look, if we do clear that 3057 territory, my next target is going to be the 3067 tick. And the 3088 zone could be the next target, which is around 50% here on the Fibonacci extension. And I would say, mission accomplished. Yes, we came like shy of hitting by $2 from that, exactly that level. But I keep on saying, and I said it before, and I'll say it again, and I don't know how many times I need to stress it out. It's never the exact level, it's always the area around that level. So keep that in mind. If we do draw the Fibonacci extension this way, then you'll see that it's almost a perfect match. 38.2 here on the Fibonacci, 38.2% on the Fibonacci extension, which is drawn from the low of the 28th of February to the high of the 20th of March to the low of the 21st of March. There we go. Boom. Fantastic. Looking good. If we do clear the current all-time high, I mean, I think that that's it. We're kind of set for a move towards the 3,100 or maybe above. I mean, where this is going to find its resistance, I don't know, to be honest. Hopefully this was it, but for me to get maybe a little bit more excited with the downside, look, a drop back below the 3,057 territory at least. That's what would be needed. And to be honest, today I would love to see something like that. Why? Because then on a weekly chart, we'll have ourselves a nice little false breakout. That would be fantastic. That would be technically amazing. Yeah. So yeah, let's see what's going to happen here. But Paul, if you're still watching, thank you very much for that China gold news, because like I said, I didn't hear about it. But again, let's see if it's going to impact, because they found more gold, that's fine. But if suddenly still people jump in with, thinking that, gold is the best option for, parking your money, look, where do you still buy it at these levels? I mean, let's say the stock market starts moving, shifting to the downside, do you still buy it at these levels? I don't know. Personally, I don't like to buy something which is, let's say, at such highs. I think it's like chasing the market, and you never know. Okay, yeah, maybe it could go still higher. Don't get me wrong, but still, at this point, I really don't know. I mean, I don't know if it's gonna. For me, this move already looks quite, spectacular. Let's jump into silver very quickly before I run out of time. Beautiful pop here, and we are approaching this key area of resistance, the highest point of October of 2024. Excuse me, messages from deep within. But that's also the highest point of 2024 in general, and we are approaching that area, 34.85 zone approximately ish. So let's see if we can get that move, if we can get that breakout, and if we can get it, then okay, let's aim for higher levels. Let me just put the trading view chart here. I think it has more history. So yeah, look, this one, unlike gold, this one still has plenty of room. So if looking at from the perspective of, let's say, value for money, I would say silver looks a little bit better to me, because if we are, if silver at some point will reach the current all-time high, so that's absolutely fine. Will it be right now, or will it be a little bit later? Again, I don't want to rush. And looking at this monthly chart, by the way, we have distanced ourselves quite a lot from the EMAs. And again, are we going to see something like what we had here back in, back in 2010, 11? Or actually, are we going to stabilize a little bit, and we are going to see something like we saw back in, back at the end of 2020? Again, it's unclear. Yes, key important resistance we're watching is the highest point of last year. If we can clear it, yes, I'll go a little bit more to the upside. Am I going to go straight away towards this area? No, but I'm going to go, slowly towards the 36, 38, and so on and so on. Paul here, if Trump keeps on with his tariffs and all that, gold will go up. Yeah, but then, I mean, look, even him, even him, I think that he needs to understand that, he cannot really cause too much mayhem, right? I mean, okay, of course, there are sides which benefit from that, but there will be a lot of strong sides which we're not going to be benefiting, and everybody will say, look, dude, I mean, you need to calm down a little bit. However, maybe the goal is to force the stock market to collapse and just create this craziness and everything. I wouldn't be surprised if that's the case as well. So that's why you cannot be mad at him for this, because in a way, if the bigger, plan is to kind of force the stock market to correct much lower, then it's like, because again, big people want to go shop for good company, for good smaller companies which are maybe on a verge of collapsing or something. Then yeah, I mean, that's part of the deal and part of the situation, part of, like, tell me something new. It has been done all the time. It's just that, what I keep on saying with him is just like, these strategies, these tactics have been used for ages, right? It's just that this guy is just talking out loud about them, and maybe that's what the other people don't like, because he's actually saying this out loud, doing this like very directly and openly, right? I mean, normally everybody tries to hide this, like pretend that it's like, oh no, just the stock market decided to collapse, but no, so it's all it's all a nice show, as always, and you have the best showman in there. Anyway, silver, that's the situation here. Oil, let's have a look what's happening here. Look, we remain above the 50-day EMA. And the question is now, can we continue pushing higher? Look, with oil, I'm still not very positive on oil, to be honest. I mean, I'm still kind of, I don't really buy this. I mean, I really, I don't know. For me, oil still looks bearish, but hey, maybe we want to go for a larger correction. Maybe we want to create that positivity, so that people would start jumping into it again. And then we could, like, boom, we could sell off or something like that. So at the moment, I will say it this way. For now, it does look it wants to go higher a little bit, as it remains above the 50-day EMA. But in that case, I'm just going to aim for the 100, and then I'll see. And if we break up and we stay above the 100-day EMA, I'll go for the 200-day EMA, and then we'll see. So I'm not really rushing into things. But if we start falling below the 68.34 zone then that's where the interesting bit for me could come in. Natural gas. Again, beautiful move here. Everything's in line. We found good support near one of my levels, 3.74. We've rebounded, pushed back up, pushed back above the EMAs. Okay, that's looking quite good here. And to be honest, let's see if this makes any sense. Potentially, but I think, okay, look, very simple. A drop below 3.74 could open the door to some lower levels. A break above this downside line could open the doors to some higher levels. Honestly, I'm not going to really dig into this too much, because again, at the moment, the stockpiles of natural gas have increased a little bit. Again, if demand doesn't, I mean, somehow if demand picks up, but with demand, I mean, we're going into summer right now, so it's really difficult. Coffee, one of my beloved ones. There we go. We failed to reach the 411 zone. I said to everybody, look, do not rush into this one. If we do pop above this area, then I'll consider a higher level. But we came very close. We came to testing that area slightly above the 400 zone, and when we reversed back down, the 50-day EMA is providing fantastic support here near the 50-day EMA. And look, this is, if we do drop and stay below the 50-day EMA, I'm going to lean a little bit more towards the downside. Very quickly on sugar. Sugar dropped back below towards the 19 zone. Okay, you know what? At this point, actually, what I'm going to do is I'm going to remove all the drawings and I'm going to leave it as it is, because I previously liked it. Now I am struggling with this. I have to admit, I am struggling with sugar here. Not like in real life. No, in real life I love sugar. But hey, everybody, likes whatever they want. Look, somehow maybe this could play the game here. Again, it's very subjective here. I mean, this is just trying to find something where it's not maybe. So that's what I'm saying. That's why, okay, I'll leave it this here, but yeah, it's not something that, like I said, I'm just gonna observe it. I like it, but I want to see a little bit more clarity in sugar. Paul, Darius, can I ask for a bit of education of market gaps? Like, if price drops down and there's a gap, will price go back to that level and fill the gap after some time? That's how it works. No, yes and no, but it doesn't always do that. It really depends on the instrument that you're looking at. If it has not got enough liquidity and if it does have enough kind of say interest in general, then most of the times I would say then yes it can. However, I've seen scenarios where like in stocks, for example, stocks, if you're trading stocks and if you see a gap, but if it's a, like I say, falling stock, I don't know, like let me see if I can, this one maybe. So no, I mean, I'm trying to find like a recently something like recent, it doesn't look, it depends, really it depends. For example, let's say if we're talking about an index, right? We saw, I'm asking because I invested in ATOS and it has a draw. Okay. Sorry about that. Is that I'm talking about? You're talking about which one? The company ATOS, which is on the Paris Stock Exchange, or are you talking about now? To go back up. Stock split and all that. So which one? Which one? I'm looking at this one. Is it ATOS, which is this one, which is traded on the Paris Stock Exchange, or Atossa Therapeutics? There's Euronext. I'm assuming this one, right? I'm assuming the Euro. Yeah, that's the one. Right. Okay. Look, this is a. Okay. It's very clear that you have to kind of stay. It's not gonna. I don't think that's gonna come back. Yeah, I really don't think it's gonna come back unless somebody's gonna buy this. But again, the question is, if somebody's gonna buy it, then this is the monthly chart even, like, I mean, oh my god, this is like stock split coming up here, right? Okay. No, I mean, like, you have to look at the fundamental. I cannot really straight away tell you right now what's the problem here. I mean, I'm assuming earnings. I'm assuming that's not really the company that's very. You can see clearly that this is not doing very well, and like, and to be honest, personally, I mean, I do stay away from companies like that. Like, for example, QD. I think that's the Chinese, one of the Chinese companies. Look at this. I mean, initially it was looking good here, and it did recover from areas like here, but again, it did recover a little bit here. The question is, can it pick up? Made like 1K with it. Look, this is what you're doing right now. You are actually speculating. You're not really investing in this case. I do apologize if I sound bad, but you're not really. This yeah, this is purely like gambling right now. So maybe at one point, maybe it will jump here or something. Again, you're doing this at your own risk, and I would say just be careful with that, because and I wouldn't put your all your money into this, because again, for me purely, this is like, you're speculating, you're not really investing in this. The company, I think, is going to be like, it's going to be delisted or something like that, but it look at least the action, this action looks to me like it's going to end up being delisted, and just yeah, just be careful with that. So if you want to play this game, okay, great. If you feel comfortable with that, just the only thing is I would probably say, if you made some profit on it, just play with the profit. Keep your initial deposit separately, like move out of it, take it out, but then just play with the rest of the profit, so that you wouldn't risk the initial deposit. If you're doing that, then okay, then you're fine. But again, you have to accept the fact that, look, I'm assuming you're referring maybe like going back, filling in this gap or something like that. Again, I don't know really all the details of this company, and I would be really stupid from my side to try and try to say something like smart about this. But I think that you need to look at the fundamentals, and in general, if the company can be bailed out or something, or can be picked up by someone. But to be honest, if you're an investor, or let's say, you really, you look at the stock market and you look at this, I mean, this just doesn't attract buyers in a way, because this has been, yes, when the price drops, but it has to be fair valuation. But at this point, it's just, it dropped. It's like almost at zero, and yeah, it's not really something like where's that Nokia? Nokia Corporation. Look, Nokia Corporation is another good example, right? I mean, look, at one point it was fantastic. Look at this. It was trading nicely, but then it collapsed. It started, it from $60, it dropped all the way to, what's the low here? It's the, what was this? Yeah, there we go. 1.33. Okay, it recovered. It took us what, how many years? Just 10 years, right, to recover to this. Okay, it did push nicely here. It took us only 3 years to get back here, but at this point, when it's at 1.33, you don't know if this is going to be, if this is the floor, is this the point where you buy, or actually were you buying here maybe at 3.69, or but then it starts dropping here at 1.33, and then you're thinking, what is going to become something like the same Atos, right? Again, this I see as pure speculation and gamble, and you go here with the money with probably you're okay to lose, because again, you don't know this is going to rebound. Okay, congratulations, you've managed to buy Nokia here at 1.33, and then you're currently holding it, and you're doing very, very well. Most likely right now you're doing something like no, not this, not here. You're doing around what, like almost 300% here. Okay, congratulations. That's fine. Lower than zero, right? Look, they won't. In terms of the recovery plans, look, okay, I'm just going to go with because I'm seeing your comments coming through. So AUDUSD is a big tech company, good news, good recovery plan, billions of shares traded daily. They might have all these funds and everything, but they might go private, back private again. They might be delisted. And again, if you start buying, somewhere, at zero, it will never go to zero, but it will just get delisted and everything. And if you bought it at 0.04 and it dropped to 0.02 before it got delisted, you still made a loss, so it's like, that's the problem. So they will close everything, all the trades on it, and you will still take a loss. So that's what I'm saying. They won't go lower than zero. Yep, I don't understand how companies collapse like that from 1K hundreds of dollars. I'm trying to see how it works with this for some time. Look, you do whatever with ATOS. You do whatever you're comfortable with. I would say just be careful. And in terms of these companies collapsing, they look. There's a very simple explanation. What comes up must come down. You don't have to go far. Look at this company. I mean, at some point, everybody was like, wow, NVIDIA, wow. I mean, okay, this was before the stock split and everything. I mean, sorry, after the stock split, we see these numbers, but then we were like at thousands and 1,100 at some point, right? And I mean, it's like you cannot this was hype. This was really okay. NVIDIA is a good company, but not to that extent. SMCI, another one, right? Also, which was traveling higher together with NVIDIA. Look at this. It reached this, and now it kind of like collapsed almost. So that's what I'm talking about. So like almost 80%, almost 100%. We shed. So that's what I'm saying is you need to what you always have to remember one thing: what comes up must come down. Very simple. At some point, they all even. Let's put it this way: even if the company is still good, like for example Nokia, I would say, right? The company is still good, but somebody decides to put it down because everybody suddenly understands that this this company might become way too dominant, it could become like a monopolist, and just the market kind of or people behind the market, they kind of make the adjustments, so you just have to, you can just create bad publicity and stuff like that. You can have competition coming out, you can have DeepSeek coming out, and or something like that, or find another chip maker who's going to be doing chips cheaper, and there we go. Like it's a matter of time sometimes that when you can go down. So just be careful with that. Yeah, look, I mean, NVIDIA, of course, they're good. I think that the stock could still rise, but again, I think that at the same time, there's going to be competition at some point. Everybody finds competition, and strong competition. So will it be this one, or maybe it's going to be, or maybe it's going to be these fellas who are going to come in, with Broadcom. Maybe it's going to be AMD that's going to come in with some sort of new thing. Like AMD has to jump in with something new, really something extraordinary, and that's it. Like you have a disruption of balance, and NVIDIA they could still be a good company and produce good stuff, but then you have an alternative company like AMD, for example, which produces something as well. So that's what I'm saying. So just be careful. Don't think that one company can actually be the top company forever. Ladies and gentlemen, first of all, Paul, thank you very much for your comments. I really appreciate that. I will have to wrap up the session here because I a little bit overstayed my welcome. So look, ladies and gentlemen, thank you very much for watching and listening. I really appreciate that. And I really thank you for, I'm going to just, wait, the crypto world, very quickly. What's happening with the crypto world? I almost forgot about that one. Okay, look. I talked about this on Wednesday. I said, look, we're forming something of a rising wedge pattern here, but we need to wait for a breakout. And so far, the breakout is happening. So let's see if we can stay below this lower side of the rising wedge pattern. If we stay below it, I'm leaning a little bit more towards the downside. I'm not leaning very much to the downside, but initially, I'm just going to aim for the 200-day EMA. Hamza Malik, hi, thank you very much. And see you on Monday, Paul. Yes, if I catch you. Yes, okay. Well, you know where to find me now, right? So yes, join the session. Do subscribe, honestly, like as well. Maybe it's not gonna hurt. Maybe a notification, a pop will come out. Also, you can, like I said, you can always reach out to you. Follow me on LinkedIn. You can follow me on LinkedIn there. You can see all my updates. I do update the feed a lot, and also you can find me on you can find my professional account on Instagram if you wish. So I do my updates in there as well. But yeah, look. Thank you. First of all, Paul, thank you very much for the nice conversation. I really enjoyed it, and this is what I always encourage everybody. I really encourage everybody to kind of to engage in communication, and this is what these live sessions are for. Yes, maybe they're very lengthy, but it's all about the communication here. That's the whole point of this webinar in a way, so that people would could jump in with questions if you wish. Sometimes we might think that, oh, but maybe my question is going to be stupid. No, it's not going to be stupid. Like, no, there's just, maybe you're not getting it from the right angle or something like that, or maybe something you will mention something to me which I didn't know. For example, this the Chinese gold situation. So yes, thank you very much. Right. Right. Okay, Hamza. Look, I don't deal with there's like these deposits and stuff like that, and bonuses and so I think that's more of a question to our sales team, and they can answer that. But yeah, I don't. I'm an analyst. I mean, I analyze the markets. That's my job. So look, ladies and gentlemen, thank you very much. Thank you very much, everybody. I hope you're going to have a wonderful weekend. Join me on Monday, as always, 8 o'clock GMT time. And yeah, we'll go from there. Have a beautiful weekend, and I'll see you later. Bye-bye.